tech sector has been driving equity markets forward for the last few years, and 2019 so far is no different. Tech stocks are outperforming the U.S. market for the 6th year in a row. Vitali Mossounov is global technology analyst at TD Asset Management, and he says the party is far from over. There are plenty of opportunities left. It's nice to see you.
Great to see you, Kim.
Let's talk about some of the numbers too. Just how important has the tech sector been on the markets in the last decade?
Well, look, it's been a great decade for the markets overall, right? If you took your money, put it in the stock market in the S&P 500, January 1st, 2010, you've got a compound annual return of about 13% per year. That's great. We're all going to take that.
Yeah.
But if you took your money, put it into tech stocks, that's 16% per year. So head and shoulders above the rest of the market. So it's really been this golden decade for technology stocks.
And a lot of that has been, of course, the FANG stocks that have come in. So how much was that? And is the FANG stock going to continue to be the leadership going forward?
Yeah, you know, it's been a heck of a decade for the FANG stocks, and some of these companies that relatively obscure just 10 years ago now are really the kings of the market. When you look at it, it looks like about $4 trillion, we did the math, of market value created in the S&P. That came from the tech stocks. But that also means that 75% of the value had nothing to do with the FANG stocks. So look, they're going to be around. They have the data, they have the users, they have the money to spend to create the new products. But as always, you're going to have new products and new innovations, new technologies, you know, autonomous cars, robotics, healthcare innovation. You're going to have these kind of things emerge outside the FANG companies.
Now, this is also, we've talked about this before, you have put together a new ETF, and this is TEC, if people understand. And part of the reason you did that was to create a pure tech ETF that actually captured some of these trends that you're talking about.
That's exactly it. It was recognizing that, look, the incumbents aren't going away, and investors are going to want to be positioned in them to own these companies. But there's going to be new themes, trends, emerging companies that we might not predict, but you know, investors need exposure to those areas. So we created an ETF, tech, ticker TEC, surprisingly, and it's got the best of both worlds, the current incumbents and the emerging tech.
Okay, let's talk about the emerging tech and school us a little bit, if you will, in terms of these sectors and some of the players. You mentioned autonomous vehicles. So I think we all know, you know, self-driving cars. You know, we've heard lots of good and bad about them, but where is it in the investment cycle, and who are the players that are actually dabbling in it or making money in it? Was even more interesting. But.
Yes, we might have to wait for the making money part,
okay.
but indeed, you know, there's a lot of criticism around it, and you know, sometimes it's understood because you look at this. There's 80 million cars sold a year. How many of them are self-driving? Zero.
Yeah.
So,
one.
but maybe one.
Yeah.
But on the other hand, you look at this and you say, what we don't see is there's a total arms race under the surface. Tens of billions of dollars being sunk in by the world's biggest technology companies, the world's biggest automotive companies over the last decade. And you look at this and the sensors, the radars, the LiDARs, the innovations finally getting so where over the next decade we might get some of these technologies actually in the market and making money for the companies.
This almost sounds like the pickaxe arguments with gold. I mean, it's, you know, it's the stuff that goes into it, not the car itself, all the components, right?
That's exactly it. And, you know, we do this all day, and it's still tough to say, well, whose autonomous car are you going to buy?
Yeah.
But fortunately, there are companies like Aptiv in the U.S.
What is Aptiv do?
Well, Aptiv, it looks on the surface like an auto parts company, which, you know, maybe that's a bit sleepy, but really it is sort of the world leader in sensors and autonomous technologies. And so you might have Toyota win, you might have General Motors win, but there's a good chance they're going to need to buy their components for these cars from a company like Aptiv.
Are the other players that we might know that are in the autonomous side? Aptiv?
Well, there are lots. So Intel, you might not necessarily associate with autonomous right away, but Intel bought an Israeli company called Mobileye that does these autonomous driving systems. They're one of the leaders as well, and so Intel is actually an interesting way to participate in the space.
I guess the hard part with this stuff too is, I remember talking this years ago, is just also the pure plays. It's, you know, because Intel obviously is in everything, right?
Yes,
so,
yes.
But they are one that's in there. Robotics is another trend I know you try and capture in the tech ETF. Tell me more about that. What does that mean to you?
Yeah, robotics, another one that can be tricky. You know, oftentimes we watch science fiction movies. You think, well, is it androids? Is it cyborgs? And how am I investing in robotics exactly? Yeah. And truth be told, you look at the world today, we don't exactly have robots walking around. The robotics of the world today is really the industrial automation. So you go to an auto plant, there's machines doing welding, there's machines doing assembly. That's where robotics is at. But there's more exciting stuff coming. So, well, for example, we're at a point now where these robots have the machine vision systems. They have the touch and grip systems where they can handle more fragile parts.
And machine vision, just sorry to bring this down, it means it can see.
Absolutely. Okay. It can see and it can be aware of its surroundings. So because these traditional robots, really you have labor laws that don't let don't let workers be around them because they can harm a person. They have thousands of pounds of force that they can apply. But now these robots are really, to sum it up, getting intelligent and smart. So you look at things like food preparation. In the next 10 years, can you have millions of robots beginning to replace people in more repetitive tasks like flipping a burger or serving coffee? We're finally getting to a point where the technology is there to begin to introduce these new use cases.
And how do you play that from an investor standpoint? I mean, what are the, because again, I know this isn't as, it's not like, oh, there's a robotics company that does this.
Right.
I'm assuming it's the componentry again.
It is the components, but in this case, there are more concentrated robotics companies that are doing this. They tend to come from Japan, so Yaskawa, Fanuc, they are very dedicated global leaders in robotics that are not only the leaders in sort of the industrial robots that we've been speaking about in the historical phase, but also over the next decade or two.
The last one that you mentioned in terms of a big trend area is healthcare, but healthcare technologies.
Yes.
So tell me what's exciting within that.
A lot, but what's particularly exciting, we think we're on the cusp of this revolution in healthcare technology, and really it's genomics, right? This word might sound mysterious to some, but it's really just, can we map the DNA of a person? Can we understand the DNA of an individual? Because we all have genes. Those genes tell scientists and doctors, are we more predisposed to being afflicted by a particular condition or disease? And so if we begin to understand the human genome, then we begin to actually solve some of these ailments.
And I think what I've heard from people too on this is that there's lots of this that exists at a very, I'd say, superficial level right now, where it's like, you take a DNA test. It tells you a little bit of all that kind of stuff in there, but it still isn't at the point where it's kind of like mass market, bespoke medicine for you kind of thing.
No, and look, I mean, a lot of this stuff is still experimental, but there are hundreds of trials right now in the United States. Things are happening. Let me tell you, it's always about economics at the end of the day, no matter what people say. Think of it this way. In 2003, we first sequenced the human genome, right? So understood all, the DNA. Yeah. That project took 13 years, and it cost $3 billion. Right now, there's a company called Illumina that makes these machines. Again, the picks and shovels argument. They can do this at a cost of a few $100s and in a matter of hours.
Wow.
So we're really getting there. And so again, still experimental, but as we look out over the next decade, what might be some massive areas? I mean, healthcare, it doesn't get any bigger than that, right? Everybody cares about their health, and they're going to be spending money to improve their health, to improve their quality of life.